Welcome to the Trading Lounge and the Day Ahead Report, and we'll be back in our office on Wednesday, so any phone calls and emails will be answered then. The Dow Jones here on the US 30 here, the pattern that's sitting on the 13,000 here, this particular one here, is corrective in nature as it's got overlapping wave structures. This move down through here has taken out the top through here, so it makes it a corrective pattern, so we should expect new lows to be made from 13,000 there. Of course, we'll see some sort of bounce, and we may even see a 61.8% bounce from down to 13,000 and then retesting through here, maybe at this level or this level here before we see further downside. And that's pretty much the same with most markets as well. So when we look at the S&P 500, this is a 4-hour chart here, you can see that it has the same pattern as well, and yeah, so does the FTSE and the DAX as well in their own way. This is the UK 100 here, so it's got its bounce through here as well, and you can see that the move up through here is corrective because we've got overlapping wave structures occurring. So once again, this move down through here on the UK 100 here, if we just take a closer look at this little top formation here, hasn't really given us any evidence of a 5-wave structure to the downside, because from this high here we got down for 1, back for 2 here, and down for the 3rd here. So on top of group 1 here, the 5830 and 5820, we should see support for a 4th wave and then a 5th wave down. But if we get 5 waves coming down through here, then we would see a 3-wave counter trend, and then we'd see another 5 waves working lower through here as well. So if you're looking for a short in the UK market, it would be probably better off to wait for the confirming 5-wave structure to the downside, an impulse wave, and then also waiting for the ABC back up, and then looking to work the trade in from that area there. But the ABC bounce can come back into the midpoint here, the 58.50, so a little bit of patience on that one there. And this is much the same for the DAX as well. On the DAX here, it's probably just better to wait for this move down here to resolve itself, a bit like the FTSE, or wait for the 7300 here to become the retested resistance. And if that's going to be the case, well then this low here should be taken out. So there could be a really nice short trade coming up through here for these markets, but just approach it in a steadfast way, and you'd want that 7300 to be a retested resistance, so a move down like through here, then a retest back up, but failing at that stage, and then moving down from that stage there, and feeding a trade in from there. So let's just see how that develops, and how the market treats the 13,000 with the Dow Jones, and the 1400 with the S&P 500, and also the US dollar to the index to the upside. The Australian market is a bit of a mix between all these markets we've just been sort of looking at then. As sort of mentioned earlier in the week, that last week, that these rallies that we've been having here are all really quite similar to one another, except they're getting larger. So it was really giving a bearish bias, but also being under the 4500 or failing to find support last Thursday, we're talking about it on top of group 1 here, made it a bearish scenario in here as well. So we can expect more to the downside now as well, because this whole pattern here really is very much like the S&P 500 as well. So just need to bear that in mind, even though it's slightly different, but it's the same. So we should be seeing further to the downside. It could possibly come down to the 4350 here. That's where we're looking at before, the same wave of 1 lesser degree. So we'll keep an eye on that, but there will be supports all through here as well. So alrighty, let's have a look at the commodities. Are they going to be part of the drivers for any further downside? Okay, this is the US dollar index here, and we are counting 5 waves to the upside. This is a nice retested support on the 80 there. You should have noticed that on the Friday there, as that's moving up through here and working its way up through to these stages here, and that's exactly what we look for. And we also looked at this being twofold, this particular move through here, and one of them was having this as an A wave and a B wave and a C wave down through here, finding this retest of support on the 80 and making new highs here does put it on the long side. The move that's coming up through here is still the third wave, and I think that third wave is still unfolding as well. So there'll be a fourth and a fifth here. So we've still got a few days to the upside, which will take us beyond the US elections on the Tuesday, and of course the RBA announcement on Melbourne Cup Day as well at 2:30. So, and we're seeing the Australian dollar being sold off there. So the bias, I haven't had a look at the interest rates yet, but there would be some bias of a cut coming on that side of the fence there as well. So keep an eye on that. But the commodities, as mentioned earlier, is that on the copper here, a good guide stick for the base metals, looking for that to come lower as well. We're looking for a certain consolidation around the 350 here, and once that's complete we'll be looking further to the downside, and that's pretty much unfolding as expected. Here's a bit more of a close-up view through here. So this move coming down through, so this can extend down through to here as the US dollar extends to the upside. So the 345 will offer some support through here, and then the 340 as well. But what this means is that it does place pressure on the material sector. The US BHP is still holding up quite nicely around the 72 dollars here. It hasn't rejected it as such. Of course, we'll see this is a corrective pattern here and a possible new low in here. So you may be able to get a short in here if you need to hedge BHP at all. But yeah, let's just see. At the moment that's resistance, and we'll need to see if that becomes support here. But this can also be a whole corrective pattern in here. It doesn't count as a really good impulse wave to the upside, but I like to give stocks like this a chance to climb, because they can have awkward wave ones and wave twos to the upside, and it's still a possibility here, but it does have a corrective bias in terms of its pattern to the upside, in terms of overlapping wave structures, the lows taking out the highs through here. So it does have that corrective nature there, but I was just sort of hopeful that, being above 65, the medium level here, puts me into a bullish mode, and that would do the same if we found support on the 72 there. So we'll see how we go with that. It hasn't been rejected just yet. The oil market, we're expecting, as you know, looking at the Elliott wave charts, we've been looking at that to work lower, and that's starting to occur now. So we should see consolidation around the 85, and then a move lower, which possibly could come from down as low as the 83 here. But we'll just stay with this little 5-wave structure we've got at the moment through here, which would be the 1, the 2. The third wave here, I think, still unfolding a little bit further to the downside. A retest back into the 4th wave, 1 lesser degree, and then the 5th wave down, which should be about the same length as wave 1 here. So taking us down into the 84 at least there. So do expect further drop here as the US dollar pushes to the upside, but also a consolidation and a move lower as well. And of course there's relationships with base metals and precious metals. So we're seeing gold come down. It should be pulled down into the medium level here now, 65. 1650 rather, and also it's coming into support here as well. So the 1672 and the 1665 will slow the price down, which will be into this group here, but we have to expect it to come lower into this particular area. The other day, or last time we spoke, which wasn't on Friday or Thursday, we were looking for a 38.2 retracement level, which would brought us into the 1727 from memory. Yeah, that's about right. And then a move to the downside. This move to the downside here is still unfolding. So I'm not sure if I've got a smaller chart here, but I'll have a look in a minute. We've got that's basically the third wave in here, okay? So, and that would be the wave 1 in here and the wave 2 in here and the third wave here. So we've still got the 4th and the 5th wave. That's why I was staying down to 1650, the medium level. But group 2 here will do its job and see certain consolidations within here and a certain retest. So you can use those levels as retested resistance and support and so forth to move in a bit lower there. Okay, we do have this here. So this would be wave 1 and wave 2 into here, so this would be the third wave here still unfolding. So this would be wave 1 to here, wave 2 to here, then this is the whole third wave still unfolding, so it'd be down for wave 1 here, back for wave 2, and then this is all just the third wave, so 1, 2, 3, 4 and 5 down here. So there's still 4, 5, there's still more to come down. So if you took a mirror image of this and turned it upside down, that's what you'd be looking for on this side down to the 1650 there. Right, let's have a look at the Australian dollar and the euro. Okay, this is the US dollar here on a 15-minute chart. It reminds me, just looking at it, very much like the gold chart in the opposite direction. So this is obviously the third wave moving up through here. I don't think it's finished when you look at, you can see the 5-wave structure within here for being wave 1 and wave 2 here. And this is still the third wave building through here. And normally the gap is in the third of the third. So there's still more to come up through here as well. So it's got to get through group 2 here, subgroup 2, before it gets up to the 81 area through here, if not higher. So yeah, just watch that move to the upside and you'll see indices, commodities and forex moving to the downside. So when we're looking at the euro here, in the bigger picture here, we really need to have a look at this in both sides now, because it's testing the support level, and the main support level, the 128 is important, but the 12772 is more important. So a breach of that, or that as resistance, really opens up a larger picture to the downside. And you can see here that I've got we've always had this as wave A and wave B, and we're looking at a C and a D and an E here as a triangle pattern through here. But if this 127.72 becomes the resistance through here, then we really need to look at this in bearish light as well, and that would be down for 1 here, an A and a B and a C for wave 2 here, and then a larger pattern unfolding down through here, which would be down for 1 here, back for 2, and a third wave. So it could cut quite deeply through here. We've got the US elections coming up, so as mentioned, Romney would cut the printing press, so to speak. So there could be quite reasonable concern out there for that. So this pattern here also too, just sort of by the by, is also very much like gold and copper. And as you know, the copper price and the gold price have come down quite a way, you know. So we need to bear that in mind. They may be leading this particular pattern. So and also too, simply being under the 130 there on the retest there, you know, really puts that as a bearish bias. If that had found support, then I'd naturally look for long trades. Failed retest like this puts us straight into a bearish bias. So just looking at the 4-hour chart here, you can see that this is, and you can see it's also, you know, picking up a bit of speed through here as well. We could look at this being, you know, 5 waves to the downside here, an A and a B and a C back for wave 2 here. So this you know, it could come a lot further to the downside. You could probably, looking at this, it could come right down to the 125 quite easy. So just need to sort of bear that in mind. Obviously, in terms of trading short, you need to navigate your way in around the price. The 128 is really important through here. So this can still be the triangle, but as I mentioned, you know, if it finds the 127.72 as the resistance, because the triangle's in 3 waves, so we can allow this to come down in an A and a B and a C wave. So this C wave here would have to be in 5 waves, and that's what we'll be looking at now. So we'll navigate through that. But if that really extends strongly to the downside, then we need to consider this a 3rd wave down. We'll be looking at down for 1, back for 2, 3, 4, 5. And so also stock would be in the same position as well. So when we look at the S&P 500, the Australian ASX 200, we need to give all those consideration as a bearish pattern unfolding to the downside. And that means we need to cut any longs pretty quickly and roll into being larger on the short side as well, and also offering a really good opportunity to short and make money on the downside. So be careful we don't get stuck in one mindset during all this as well, because we need to trade what we see, and we need to be on the right side at the right time, and we do that by working around the numbers. We've got the warning signals already, because the euro here on the second retest here has basically failed in there. So we've had that two retests here and nice corrective patterns. So that's the warning signal. So anyway, in this little move down through here, we can see that the strong move down here is a third wave, and that may not be finished just yet as well, but we can see that this little move down here would be like wave 1 coming down, wave 2 coming back over to here, and the wave 3 down. So we're like 2/3 of the way down into this particular structure here. So that would leave us into Monday and Tuesday as well. So Wednesday and Thursday, as you know, always bring us the swing days, so that would see us 5 waves down through to here, and then some type of ABC correction as well through here. So so sort of midweek we will be seeing, normally would see the next sort of trend come out of it, but because of the US elections, it's not the US elections really drive the situation that much, as never done in the past, but there's a fair bit at stake this time, so we'll see short-term volatility. The Australian market, Australian dollar, what we were looking for, as you know, we were looking for support on the 104 here, and we're looking for a higher move into the 104.50 area here. Fortunately, it just didn't happen. We didn't get the support on top of 104.30, which we would have been looking at. And also too, we've got this like retest here of the 104 as well. And this, if because of the rates, the RBA rate on the Tuesday there, they would normally run that up higher and then sell it off there. But obviously the bias is to the cut, to the downside. So we're seeing this being sold off here. So what we could do now is we could look at the move to the downside in terms of a impulse wave to the downside. So the impulse wave would be 5 waves, just like this first wave here. So we've got down for 1 here, back for 2 here, and then we've got wave 3 coming down, 4 and 5 here. So this, we could use this as a bit of a fingerprint of what we're going to be seeing unfold down through here. So wave 1 to here, wave 2 to here, and this move that's coming down through here is still unfolding. Excuse me. So I've got this wave 1 down to this point here, the wave 2 coming back into the 103.72 area here, which obviously would be looking at a short area for using that 72 as a short. And the third wave come here is really quite powerful, isn't it? So, and you can also, if you look closely, there will be 5 waves in this section here as well. So what we've got in this third wave coming down here, we're only 2/3 of the way through that. So we've got wave 1, wave 2, third wave is coming in, so there's going to be a 4th wave here and then a 5th wave down to make wave 3 here. It's going to get bumpy into subgroup 1, 10, 20 and 30. So we'll see a wave 4 to come in through here, and then a wave 5 down, which will take us into the 103 area here. So we're going to see some sort of bounce in through this 103 area here. The 102.72 here is going to be an important part as well in this, so that would be something that you could aim for to the downside, but that would bring in some good support for there as well, so just be aware of that. But yeah, because of the rates, RBA rates, just stay within the structure that we're working with, and we'll pick it up from there. So alrighty, well that's it. So good morning and good luck.